Frontline stocks trade steady a day ahead of the US Fed Reserve's rate decision. Metals and PSU banks are the big drags, even as IT stocks gain. Mid-caps trade in line.
India's finance minister tells Network 18 that first quarter of fiscal FY25 was impacted by lower government capex due to the general elections, and growth will pick up as public expenditure picks up in the second and the third quarters.
Finance Minister Nirmala Sitharaman says facts put forward by the SEBI chief refuting the allegations made against her must be taken on board. For investors in equities and F&O, her advice is rely on authentic information.
Sanjeev Bajaj, Chairman Bajaj Housing Finance, says there is a big opportunity to grow in the housing market by outpacing the healthy industry expansion in a large market where the company still commands only a small share. The stock jumps.
Tata Consumer Products CEO tells CNBC-TV18 a rural recovery is on, but double-digit growth is some time away. He, however, expects the salt to sauce major to grow its base by 10% with acquisitions, adding another 5 to 6%.
Hello and welcome. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Ekta Batra. Seems like the market's pressed on the snooze button for today ahead of the Fed event. So we'll keep an eye out on how the frontline indices pan out. Marginally, only marginally better than the mid-cap end of things. The broader markets is where we have more number of stocks declining than the number of stocks which are advancing. But as we see it, it is the wholesale price inflation, the August WPI, which is out for you on the screen, 1.3% versus expectations of close to around 2% as well. Lata joins us too.
Yes, well, absolutely. Lata, over to you.
Okay, no, I just wanted to say that it's pretty close. 1.5 was the average I got, and the range was between 1.1 and 1.8. Actually, there were quite a few readings at 1.8, but the 1.1 brought the average down considerably. So anyway, it is in the ballpark. The important point is last month, the inflation number had come in at 2.24. So, okay, it's been lowered now to 1.58. But the important point is that, you know, the inflation number, which was rising, we must remember that we are comparing this with 2023 when almost all the months were negative numbers. So one was expecting that things will start climbing a bit. The fact that the current number is lower than the previous month indicates probably the impact of Chinese disinflation. Just about everyone from steel to EVs to solar are complaining about Chinese dumping, and it's possible that that's also getting reflected. This is the manufactured products inflation. As you can see, month on month, 1.2 versus 1.58. So actually, it's lower in inflation, although the base actually should have given us a higher number. But we can still see that month on month, the manufactured products is falling. That's because perhaps the global disinflation is so severe. Food inflation has come down considerably, as you can see. That's yet another positive from the WPI number. But potatoes and onions are still expensive. And as you can see, the potato numbers are flashing for you. Overall inflation number, August WPI at 1.3, is lower than the CNBC number and lower than the July number as well. So clearly a softening of WPI. With those preliminaries, let me invite our guest, Aditi Nair, the chief economist at ICRA, joins us. Aditi, this inflation WPI coming in lower than expected, what do you take away from it? Will it have a bearing on CPI at all? I mean, I know that there's very little overlap, but still will it have a bearing on pulling down CPI?
Thanks, Lata. We were also at 1.8% for this print, so it has come in a fair bit lower than what we were expecting. And one of the main reasons that we would expect, prints to remain quite soft over the next couple of months is the global commodity price situation, which has turned quite benign in the recent weeks. So while we are expecting a slight uptick in the WPI in September as compared to August, that's mostly because of the base effect related to food prices and not really because of a material change in the commodity price outlook globally. As far as the CPI is concerned, I think we need to see many of a clear trend of disinflation in commodity prices for that to really start to seep through to the non-food goods part of the CPI. The services part of the CPI, of course, carries on in its own trajectory, and the stickiness over there is very hard for commodity prices to really break. And food prices, while the immediate term, we think that there is going to be a turn in the base effect, which will lead to higher prints for the food inflation. But overall, if we look at, the rainfall, the kharif sowing, and particularly the reservoir situation, it's generally setting up well for a better second half of the year.
Okay, well, at the moment, cereals inflation is still high. I checked the WPI numbers coming in at, I think, 8.5 or something. Marginally lower than July number, but still cereals perhaps, and potatoes, as you can see, are some of the products which are still stubbornly high. Aditi, the other factor that WPI will impact is the GDP number. If WPI is going to remain more subdued than many people told us, I mean, as you said, your own forecast was 1.8, it's come in at 1.3. If it's going to undershoot, then will we have a nominal GDP shortfall by the time we reach the end of the year? I think the budget is working with what, 10.8?
But Lata, at the same time, lower commodity prices will push up margins for the manufacturing sector, and that's going to push up the real GVA growth. So I think part of this will end up getting counterbalanced. We really have to wait and see whether one is going to outweigh the other. But certainly, if commodity prices remain benign, then possibly we'll be looking at a slightly higher GVA and GDP growth number for the current quarter. And in any case, in the second half of the year, we were expecting a back-ended uptake, particularly from, a pickup in government capital spending after the monsoons are over.
Okay, well, I just wanted to tell you, edible oils inflation index is up 0.7% month on month. We are going to see a higher rise in this item because of the higher import duty that's just come in. That's clearly for some farm relief that this has been introduced. But otherwise, there are no surprises. Food inflation is considerably lower. It's only vegetables inflation is down 12% month on month. Cereals is the one that one should worry about. It has not been impacted enough by the bountiful monsoon we have had so far, but perhaps it will be back-ended unless there is some La Nina monsoon which destroys some crops. We should be well on our way to a probably more benign cereals inflation. Edible oils inflation and telecom will be two things which will be priced up and bring up the headline inflation. Well, that's it really from the WPI number. Aditi, thank you very much for joining us. The key takeaway, WPI is lower than what analysts have been expecting at 1.3%. It's also lower than July. It won't have much of a bearing on the CPI. The RBI looks only at CPI, and his latest interview to CNBC also clearly indicated that he has not reduced his hawkishness on food prices. And as he correctly worries, cereals and potatoes are still higher. So from these numbers, although it's come in lower than expected, we can't have a read-through to what RBI will do in the October policy. We can't say from this number it's lower than expected, therefore RBI can be more benign. These conclusions cannot be coming through. So it's of limited use at this point in time. Just one final point. I don't think the bond market even needs the CPI. It's already falling because of US yields.
All right, Lata. Thanks very much for that, as well as Aditi to take us through the WPI data for the month of August, which is coming at around 1.5% versus 2% on the month-on-month basis. Food inflation has softened. We'll wait by for the core inflation data as well. But nonetheless, we need to take a short break with the news that the markets are extremely quiet in today's trading session. So the Nifty is just about higher by around 31 odd points. Maybe the street is in a little bit of a holiday mode for these 3 days of the week. We'll take a short break. We'll be talking to JBM Auto as they secured $100 million in terms of strategic funding. Up next, stay tuned. Well, you're still tuned into a halftime report on CNBC-TV18. It's turning out to be a quiet day, but it's a very good day in terms of specific stocks. So the new kid on the exchanges, PN Gadgil Jewelers, In fact, it's seen a very strong listing on the bourses, up around, listing was a premium of around over 70% to its issue price. Mangalam, tell us more. It's a very interesting story. They have strong market share. It's a localized jewelry play, and that seems to be working in their favor.
That seems to be working in their favor for now. Let's see how they expand beyond that, because that will be something that we'll keep an eye out on. But, there were 4 reasons why the stock was expected to have a bumper listing, and a bumper listing is what it had, over a 70% premium to its issue price of 480. The biggest reason was there was a strong demand for this IPO, over 59 times subscription for this IPO, led by qualified institutional buyers, which are almost 136 times oversubscribed. So that subscription data comes up for you on the screen. The second big reason was from the time the issue opened to now, we've seen a big rally in gold prices already, and gold continued to hit record highs as well. So that was another factor that did well. And as gold continued to move higher, a lot of these regional players continued to do well in terms of jewelry stocks as well. So the stock, which was offered at an attractive valuation versus all the other players, became a lot more attractive given, the rally that we've seen in names like TBZ, which is up 62% this month, Moti Sons up 48%, and PC Jewelers up 32% as well. It was offered at around 42 times trailing earnings. Now, post-listing, it's around 70 times trailing earnings itself. The important part would be to look at the forward earnings here. Among the things that the company told us, one of the things that really stood out for me, apart from growth coming in through store expansion and them adding nearly 12 stores in this year, reaching around 58-60 stores over the next few years, and seeing margin improvement through studded ratio improvement as well, is that because they're a local, regional, up until now family-owned player, they had unhedged gold of 65% in their portfolio. So with this rise in gold prices, this unhedged gold portfolio will actually show them a lot more gains. The quantum of the gains, management did not tell us here, but said that in the second quarter, once the numbers do come by, we'll get those gains itself. So that is also a factor why all of these regional gold players are rising, because of their higher proportion of unhedged gold itself. The previous time the management joined us, while the IPO was opening, they had given us 10,000 crore revenue with double-digit margin, 15% of revenue coming in from studded, and 58 to 60 stores by FY27 as well, looking at over 100 to 120 stores over the next 6 years too. So there is long growth runway. A large part of that, was offered in terms of valuation, but thereafter post-listing, the street has priced in some of those growth runways. Let's see whether the company can go ahead and outperform those expectations.
Okay, all right, Mangalam, thanks very much for that. So PN Gadgil is just joining the slew of positive IPO debuts that we've seen. Obviously, Bajaj Housing taking the limelight away in yesterday's trading session. But let's move on now. We have Ola Electric, which is also, ironically, a recent listing. Those shares are in focus after a slew of positive brokerage notes. Vinny is here with the details on that. Vinny.
Good afternoon. So yes, 2 brokerage notes that have given a thumbs up to Ola Electric and actually initiating coverage buy calls. BofA is the first one. Target price is what they've given is 145 rupees per share, indicating almost a 36% uptick from yesterday's closing price. So keeping an eye on that one. They're positive. Why? Because they believe that Ola Electric has the right to win, given that the technology as well as the cost leadership is something that will work out well for Ola Electric. Other than that, they're highlighting that in terms of the battery making also, there are a lot of opportunities that could work out for Ola Electric. So yes, a thumbs up coming in from BofA Securities. And the other one is Goldman Sachs. They also quite positive. They have given a target price for this one at around 160 rupees per share, implying a 50% upside from yesterday's closing price. Ola's electric market share is quite high. They have around 32% market share as of August 2024. And in their view, they're seeing that the company is quite positively levered for long-term structural trends, especially in India's two-wheeler market, electric two-wheeler market specifically is expected to see a sharp run-up. Other than that, lowering running cost is something that could work out well for the company versus the ICE two-wheeler vehicles, and declining battery costs and new addressable market share for Ola Electric specifically could be something interesting watching out for, and they expect a break-even, EBITDA break-even by FY27. So yes, keeping an eye on this one.
All right, keep an eye out on Ola Electric, up 7%. Things looking good for the electric mobility business. Speaking about the electric mobility business itself, from two-wheelers, we'll move on to four-wheelers and e-buses in particular. Take a short break, come back. On the other side, we have the management of JBM Auto joining in on their recent announcement to the exchanges of having secured about $100 million in terms of strategic funding. Before going into break, we were talking about the electric vehicles, electric mobility, two-wheelers, but don't lose sight of the ICE as well. Bajaj Auto has launched its new Triumph Speed T4, basically a Speed 400, which the street believes is a derivative of or has the same engine as the Speed Scrambler 400X, and it is a derivative of the Speed 400 itself. The pricing of this will be extremely crucial to track. This tie-up with Triumph has helped Bajaj premiumize some parts of its portfolio as well. So we'll keep an eye out on more details, more specifications. A lot of bike enthusiasts will definitely watch out for more details from Bajaj Triumph Speed T4 coming by as well. Ekta, are you interested?
You must be kidding. Okay, I could be interested maybe in covering the stock, but beyond that, two-wheelers would be completely
I have
out
to
of...
make a confession. I don't know how to ride a geared motorbike. I can ride one without gears, but the geared motorbike, no,
you
never
have
been
to have it. Okay.
Yeah.
Any which way, we are sticking with the entire auto space. We have JBM Auto, which is the first management on the show today. The company's arm, JBM Life Mobility, has secured $100 million strategic funding from ADB, which is Asian Development Bank, and Asian Infra Investment Bank. To discuss this and more, we have with us Nishant Arya, who's the Vice Chairman and MD of JBM Auto, who's with us. Nishant, hi, welcome to the show, and congratulations, $100 million which have come in. And this is primarily going to go towards your electric buses, we understand, and execution of that order book. Just give us a sense in terms of this $100 million, how exactly is it going to be deployed, and for how long do your funding concerns, how long will the funding probably last you now?
No, so definitely it's a right time, and we have got good partners like ADB and AIIB, who are amongst the best DFIs in the world and are really focused on the sustainability space. And with this, we are executing our projects in multiple states, and close to about 650 buses is what we'd be covering with this particular funding. And with such prestigious institutions, it's a strategic partnership of $100 million, which is starting off with different states. And I think we'll be looking at expanding this further as we go along. And this is the first step in this direction. And clearly, we'll be launching these buses in this financial year itself.
How exactly will this $100 million be deployed? Can you tell us how exactly will it be utilized?
Yeah, it will be utilized for our JBM Eco Life Mobility subsidiary, which is into the electric mobility business. And it already has orders from multiple states. So a couple of the states would be utilizing the funding from ADB and AIIB for executing 650 buses.
Can you tell us a little about the nature of this funding? Is it debt funding? If yes, then how much are they likely to deploy, at what rate? If it's dollar denominated, then, are you going to hedge it, etc.? What's the cost of this debt likely to be? And if it's equity funding, then what's the stake that you're pairing with?
So it's a structured debt, which they have given us in this particular transaction. And it's for the long term, for about 10 years plus. And definitely in this case, it is pegged very well with the market, and it's a rupee debt. So we have no hedging requirements in this case. Yeah.
And what is the cost of financing here, and how much are you going to take immediately? Because $100 million, obviously you won't take it at one shot, right? You will have some tranches here?
Yeah, so $100 million over the next 2 quarters. So within Q3 and Q4 of this financial year.
All right. Okay. And first half of this year, how many buses have you delivered already, and what's your delivery target for this year?
So delivery target for this year, we have targeted a revenue of 3,000 crores from the electric bus business.
That's roughly 1,500 buses, right?
Yeah, you could say 1,500 to 2,000 buses.
And how many have you done in the first half so far?
First half so far, we have done close to about 500 to 600 buses.
Okay, so you've done 500 to 600 buses in the first half. Your company has an order book, your current order book in terms of electric buses is around 6,500 plus.
Correct.
Okay. And over what period of time will this entire order book be executed, and what is the incremental addition to the orders that we can expect?
So consistently we've been sharing. So like recently we won an order for intercity buses for 200 buses, which was closed a few weeks back. Then parallelly we have been working on new tenders. I think lately the scheme which has come out on electric buses is really going to be a big game changer for the industry, because the new PM e-drive out of 10,900 crores, almost 40% plus has come up for electric buses. And in addition to that, the 3,400 crores plus of the payment security mechanism, which is called as PSM, is also for the electric bus segment. And also in the EV charging area, 2,000 crores have been allocated, where 72,000 chargers are there, out of which a large portion would also be going for ultra fast charging for e-buses. So I think e-bus, being the common man focus, is the largest gainer from this scheme today.
All right.
Okay.
Secondly, yeah, go ahead.
Just a quick question before I toss it over to Mangalam. The last time you spoke to us, you said that you're not looking at any kind of monetization plans for your EV business. You've raised around $100 million via structured debt now. Any kind of further fundraising equity which you would probably consider, considering the kind of growth that you're talking about in this space?
No, so we are consistently receiving a lot of proposals from different financial institutions at all times. So we keep evaluating them, but there is nothing concrete as of now which I would be able to share. And this is also a structured debt fund which we have taken here. So I think on the equity side, there is nothing which is concrete as of now.
On a consolidated basis, what would your debt be on the books, including this one?
Including this, if we see, we are, I think, about, I would say, as of Q1, we should be close to about 2,500 crores.
2,500 crores plus this over the next couple of quarters would be another 830 odd crores. Final question, you said 3,000 crore in terms of bus revenue. Earlier you had said 12% margins as well. Overall revenue this year target would be how much?
6,500.
All right. Thank you so much for joining in and giving us all those details. 6,500 crore for FY25 revenue, 3,000 crore comes in from buses, 1,500 buses to be delivered this year versus 500 that have been done in the first half itself, and a bus order book of over 6,000 units, at the same time securing funding of over $100 million over the next couple of quarters from ADB at it's a rupee denominated debt. Let's bring in Sachidanand Uttekar for market technicals now. Indices still consolidating, so let's go straight into stocks. Sachi, your thoughts on what are your top picks for the moment?
Good afternoon, Mangalam. Good afternoon, Ekta. I think clearly the market is trending well, and both Nifty and Nifty Bank and Nifty IT are contributing towards the up move. So we stick with our stance when it comes to Kotak Bank. Even last week we discussed this particular setup on this show. We are of the opinion that the bullish flag formation on the weekly scale looks very strong, and the monthly 5 and 20 exponential moving averages crossover has been very confident. Plus, if you look at the daily ADX, it has started trending about 26 levels, which are primary signals that there is a very strong momentum play in progress. So we are still recommending building long positions here when it comes to Kotak Mahindra Bank future. The stop loss for the trade should be placed somewhere close to around 1832 on a closing basis. On an immediate basis, we are expecting a swing towards 1880, but positionally the flag pattern target is placed somewhere close to around 1940. So there's a substantial headroom which is still available. The second stock on our radar has been Infosys. Now, if you look at the overall structure, it has been trending near its life high zone. The 1900 base now looks very strong, and there's a good OI cluster at 1960, which looks shifting. If you look at the weekly flag formation here, it is exhibiting a price target somewhere close to around 2005. So even here, the reward to risk opportunity is very strong. We are expecting a move towards 1980 followed by 2005, and that's why we are recommending building long positions in Infosys, keeping a stop loss somewhere close to around 1938.
Okay, all right, Sachidanand, we're going to leave it on that note. Thanks very much for taking the time out, giving us those technical calls. We'll take a short break. But up next, we'll be talking to Sumit Gupta of Centrum to focus on the entire hospitals as well as the pharma space. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Let's put the spotlight on the pharmaceutical and healthcare sector. Centrum in a recent note stated that pharma growth has moderated to 7% for the month of August year-on-year, which is the Indian pharma growth, and says that there is muted volume growth, which continues to be a concern. Besides that, he's written a report on Max Healthcare, which recently made an acquisition of JP's healthcare operations hospitals in Noida. So he's written on that as well. So let's get some perspective. Sumit Gupta of Centrum is with us now. Sumit, hi, welcome to the show. If you could just start by giving us your perspective on, Max Healthcare in particular. What is it about the acquisition which might be positive and which might be the biggest concern for you?
Thanks, Ekta, for having me on the show. So Max, as it is expanding its footprint into the Delhi NCR market. And if you see UP as a market, they like in the past also they have acquired Sara Hospital in Lucknow, and they are also now expanding towards the Noida region as well as some kind of tier 3 cities like Bulandshahr city. So as of now, Max has nearly 4,300 beds. So after this acquisition over the next month, 700 beds would be immediately added, taking the total bed capacity to 5,000 beds. So in that sense, Max is continuously expanding its presence in the Delhi NCR market.
Okay, it's expanding its presence in the Delhi NCR market. Noida in particular, what do you think about that location? Because we have Fortis, which has shown a good amount of growth in terms of the Noida market. Do you think that would be a lucrative market for Max? And on the entire Delhi NCR market as a whole, do you think that that's a bit too competitive now?
Yeah, I understand the concern. So point is, we need to see the hospital sector like in a particular geography in a micro markets point of view. So let's say within Noida also there are deep pockets. So be it Noida extension, Greater Noida. So we need to see from per capita income point of view also. So obviously there is a lot of competition and the concern of oversupply which is coming from the majority of the players in Delhi NCR market. So I think there would be some competition between let's say Fortis or Max or Yatharth. So, but still there is a good demand supply scenario skewed towards hospital sector, and I think hospital sector are poised for a good growth in the medium to long term.
But are you positive only on the NCR space, or do you have views on the others in the southern, eastern, and maybe the western part of the country as well? Any particular chain that you like apart from the ones that you mentioned?
So apart from that, the south-based chains are good overall. So we like Aster DM as of now. So it's a good presence, the dominant presence in the Kerala market, and then going towards the Karnataka and Maharashtra. And there are some few names. We don't have coverage on those, so won't be able to comment more on that.
Okay. A couple of these smaller hospital stocks, say, the Jupiter Lifelines of the world, have done extremely well. It seems to be this entire localized trend, micro market trend, which seems to be playing out. What's your sense in terms of growth with of these kind of hospital plays?
Won't be able to comment on Jupiter as of now, not under coverage, but overall on a broader sense, like I told, that overall hospital as a space, we need to see from micro markets. So let's say in Bombay, there is a like per capita income difference between, let's say, South Bombay versus Andheri or some Bandra. So the hospitals which are targeting those particular population, we need to see from that point of view.
Okay. Now let's move over to the pharmaceutical space. There was a slowdown which took place in the entire domestic market in the month of August. But there are, stocks are just going from strength to strength. Glenmark, for example, has seen a very strong run up. What's your sense in terms of, how Glenmark could perform here on? Considering that they now have lesser concerns on their debt issues?
Sorry, we don't have that under coverage, but still overall, we think that on Indian pharmaceutical space, overall that is being led by the chronic therapies. and less of acute therapy. And we continue to believe that that will continue to drive the growth. However, we see IPM market growing by modest, like 7 to 8 to 9% kind of growth.
Let's shift it to the companies that you do have under coverage and which do have a presence in the domestic space. JB Chemicals as well as Torrent Pharma. Cipla, to that extent as well, is very strong in the domestic market. Based on within these three, which one do you like when it comes to a domestic play?
So it is JB Chemicals. They have a strong footprint in the chronic market, and majority of the brands that they have, be it Metrogyl, Cilacar, so what they have a good dominant position within their respective therapies. So we continue to like JB Chemicals, and we see good potential going ahead.
Do you think that trigger about a possible sellout of JB Chemicals, promoters changing hands, would probably be an important trigger to watch out for?
Yeah, that would be an important trigger. And as of now, there is no confirmation from any side. So, but still, that would be an important trigger for JB Chemicals.
All right, take that point. Thank you so much for joining in and giving us your views. Sumit, just one question before we let you go. Any thoughts on the diagnostics space? Do you track it? Is there anything that you like here?
Yeah, so we like Dr. Lal. So considering the presence that it has across the nation, and we like the scalability. And going for, and moreover, if you see there is a lot of competition in the routine testing. However, if you see from specialized and semi-specialized space, Dr. Lal has a very good dominance. So we continue to like Dr. Lal.
All right, this morning itself, we spoke to the management of Dr. Lal. They did indicate about 10.5% plus revenue growth closer to 11% this year, with margins maintained at around the 27% as well, despite not taking a price hike this year, largely by virtue of volume growth and product mix itself. Take a short break, come back, focus on markets and a lot of stock-specific action on the other side. Bajaj Auto is doing well. We get to know that the price of the newer launch for Triumph would be close to 2.4 lakh ex-showroom. But we're speaking about launches, we're speaking about electric vehicles, electric two vehicles, etc. A relatively less spoken about company, Ratan India Enterprises, also in focus, seen a bit of an excitement on that stock price, largely because they've informed the exchanges that they will be making an announcement of a new electric motorcycle today as well from 5 p.m. So this is an announcement on the exchanges that has caused a bit of a spike in that stock. Of course, delivery and the execution was something will be very crucial to track for this one as well. But let's move on and let's talk about some important opinion coming in from no less the finance minister, speaking exclusively to News 18 at an event. The finance minister spoke about the IPO and F&O frenzy on the Lal Street, said that there is nothing wrong in investing in F&O, but also added that one must be cautious and trust only authentic information. She's also not worried about the GDP growth slowing in the first quarter and expects acceleration in the coming few quarters.
We'll have to encourage the markets to be robust, no doubt. But particularly when speculative activities are too much, there needs to have a sense of caution in our minds. We need to have it. And we also need to make sure that people with their savings don't go to engage in high fluctuating or high risk ventures. No harm in participating in F&O, or no harm in going and investing in the equity market. But eventually, we need to be using financial information, authentic information, before we take a call. The capital expenditure which was announced, 11 lakh crores, slightly over it, didn't find much of an expenditure happening in the quarter one because every department was probably looking at post-election time. As a result, the large chunk of influence or impact which could have been had because of the public expenditure was muted. That's right. And therefore, to that extent, it shows in the quarter one numbers. But subsequently, quarter two and quarter coming, we are in the third quarter, the expenditure will pick up, and that will, I suppose, trigger the little slowing down that you suspect to move faster.
India remains one of the fastest growing economies of the world. Given right now that, there is some soft GDP growth and the inflation is also moderate, do you think there is a case for monetary easing? I'm asking for your view.
Yes, my view being said here will become Finance Minister expects RBI to bring it down. I don't want to add to that. RBI is doing its full analysis and taking a call. And therefore, I expect them to look at the economy as a whole, both for growth and for inflation.
All right, so that's the finance minister. We'll get you excerpts of that conversation as we go along. For the markets, extremely quiet at this point in time. Do watch out for a stock such as Panacea Bio, where that stock is up around 5-odd%. It is in focus on account of winning a litigation against Sanofi, where Sanofi won't be launching a similar vaccine to them. So that stock is in focus on account of that. We'll take a short break. On the other side, Manisha Gupta will be with us.
Welcome back, and joining us now on the show is Andrew Green. He's Executive Director at International Zinc Association. Andrew, hi, good to have you. First of all, on the all kind of data that the markets really seem to be, getting impacted from, this week is all about the US Fed meeting, and we've seen some support come in for many of these metals, including zinc, which, by the way, is trading at an 8-week highs right now. How would you look at the macros? What's your sense from the global central banks and sense of rate cuts?
Right. I think well, first of all, I want to say thanks and good to see you again, Manish. The macros right now are definitely providing a good headwind or support for the zinc industry. As you said, the U.S. Federal Reserve is expected to lower the rates, which will certainly provide a boost to the economic situation in the United States, which has been doing well this year already. Added to that, you've got a tightening of the zinc concentrate market, which is causing a reduction in the zinc production overall, and that's certainly boosting the prices higher.
Andrew, how are you looking at the demand picking up? Because on one side, the supporters from the decline in dollar and the rate cuts, but on the other side, every single China data that we have seen come in, right from property to employment to retail sales to production numbers, has been on the weaker side. How do you see a balance between these two fundamentals?
Right. From the demand side, we have some very exciting initiatives and indications about movement there. So on the infrastructure side, zinc, for example, in the United States, you've got a 10% increased expectation for zinc and galvanizing. And that's having to do with the IRA Act that's gone into infrastructure. In India, we've seen a lot of investment from the government in infrastructure. And again, zinc is needed to protect that steel from corrosion, which reduces the long-term costs, increase sustainability and safety. And then also in energy and transition, we're expecting an increase in the next 4 to 5 years of an additional 700,000 tons of zinc going for galvanized structures and solar panels and batteries. Also zinc going to protect steel and windmills. So that's a very positive movement for the market from that side, as well as automotive. If you look at what's happening here in India with Suzuki Maruti switching to galvanized steel. Also in China, we've got movement there, companies switching to galvanized steel. We're expecting and forecasting an increase of 140,000 tons in the automotive market by the year 2030. So combined, that's 1 million tons expected increased demand for zinc in the next just short period of time.
Andrew, there is, if you look at the international zinc and lead group, they still are talking about a slight surplus into this year. How are you reading those numbers, and how do you see that balance between global production and consumption numbers going forward?
Right. Well, right now what's happening is there is a tightening of the concentrate supply. We're seeing that in China. We're seeing that in other parts of the world. As a result, there's going to be less zinc metal being produced. And that's going to cause a tightening in the overall supply side of things. So when you combine that with the increased demand, we're very bullish on where we're headed with the zinc price.
Andrew, while you said you're bullish in prices, what is your sense? Because in this year until now, well, we are up by nearly 10 to 11% for the zinc prices. The expectation being that the rest of the months of this year would be on the positive side as well. But going forward, how are you putting your forecast on zinc prices, let's say until the first quarter of 2025?
Well, I'll stay away from predicting a price itself. I'll let the analysts do that. But I will say, again, if you look at the supply side, what's happening there with the tightening of the concentrates, as well as demand, increased use of zinc in infrastructure, in automotive, and in energy transition, we certainly expect in the short term and the medium term for the price to stay steady or increasing in the short period of time ahead.
All right. Andrew, you are in Udaipur right now, and there's a lot happening in zinc. What are you guys exactly discussing on?
Yes, we've got companies from all over the world, 21 different countries, coming here this week in Udaipur, India. And Hindustan Zinc is the host company for this event. It's called Zinc College. And we are talking about the very things that you and I are talking about right now, the exciting initiatives underway for zinc, the market situation, zinc being used in galvanizing, infrastructure, automotive, and all these different things. So it's a great networking opportunity for companies from around the world to learn about these different aspects, but also to learn and knowledge share on what's happening in the zinc market.
So, Andrew, when we look at demand, and you expect the demand in US and India to gain up, how are you looking at the European demand? So when you look at various geographies in that sense, where do you see better demand coming from?
Yes, I would certainly highlight the US for increasing, India for increasing. In Europe, certain countries are having a little bit more of economic difficulties. Germany would be one of those, and a few others. So I think at best it might stay steady or slightly decrease in Europe, but that will be certainly offset by what's happening in India and United States. China, it really depends on what happens with the government investment. There's been discussions of them adding more investment into the housing and infrastructure there, so we'll have to see what happens in that case.
Well, yes, there's lots to watch out for, but as you said, the prices can expect to have some more bullish run-up from here with the kind of concentrate shortage that we have seen coming up. Andrew, as always, thank you so much for joining us and putting light on what's really happening with the zinc as an industry. With that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.